Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. It's not a lot of activity in the recent couple of sessions here, and actually I have checked across the board and watching for the major currencies, as I don't see something really very interesting on any of them. So on the cable market is still quoting around the support. Later in the report, in this video, we will just briefly take a look at all of them with just minor comments. Currently, let's update the view on euro currency. So as we said, based on recent performance and with the new inputs that we have from the fundamental background, I mean Omicron spreading and fears on the markets that stand across the globe. So Omicron has been detected in the United States. So that is pressing on the sentiment. Is in the media, this information is presented really in very negative tone, so this of course makes impact on the minds of the investors. So on a daily chart, we do not see big shifts, so this pattern that we initially have suggested is still valid, so we do not see yet the failure of this setup. Trend stands bullish, so probably payrolls release maybe should clarify the direction. This will be some driving factor for today's session. On a 4-hour time frame chart, the grabbers that we have specified, the first one is already completed because market has taken out of these lows. Second one makes and brings some risk to the setup because this minor grabber, as we said, suggests the taking out of these lows, and it in turn could erase the overall pattern because in this case market will drop back to the bottom. That will be not very good sign for the hand shorts. In fact, this will be mostly the failure of this pattern. So that's potentially carries some risk for overall pattern that we have. But currently, we're still watching for the support area that theoretically should be hit. And actually, guys, between the invalidation point and the potential entry level here, it will be a very small distance. And of course, you could decide by yourself whether you would like to take part in this or not. But in general, this will be somewhere around 30 pips. And if you still decide to take part in trading of this pattern, theoretically it is possible, because risk will be not very significant. If of course we will not get some straight downward action, just collapse here, this also could happen theoretically. So anyway, we're watching currently for the first step of our trading plan is reaching of the support area right here, and then see what will happen next. If we will see more or less positive performance around this level, in this case we could make the decision for taking the position with the stop somewhere below this area, because this candle means a lot for the current setup. This is bullish grabber, significant grabber that's just taken out of this top. This is daily reversal bar, this bullish reversal bar that also suggests the upward continuation. And in general, performance of these extensions that we have here, if we'll take a look on the hourly chart, all targets, major target stands above the invalidation point. So if you will take this large ABC top pattern, as we said recently, COP stands right here. If you will take this minor ABCD pattern, OP right here is 50%. XOP with the same pattern stands right below the COP. So actually it stands mostly in the same area, and both agrees with this 1260 area. So from the logical point of view, if market is bullish and it's completed some downside extensions inside of this action, it should not drop out of it. Otherwise, it will not be the bullish context and will be not bullish performance. And from that standpoint, these levels also will be important to keep an eye on. So that's the reason why we're watching for this agreement against these lows, because this area actually, this is the red line for a bullish context. Breaking it down, market stopped to be bullish. So this is important. The one thing that also is worrying me a bit is if you'll take a look at the cable on the daily chart, it's floating around the support area, but it can't show any bounce up. This is not very good. This is actually bearish performance here, because overall support, as you can see, rather strong. So we have the 618 support on the daily chart, which is important. We have few targets and different targets. This minor ABCD pattern is completed. Major ABCD OP has been hit, creating an agreement. Yes, it can drop down as well, but currently the way that market is calling without any response, this is not good sign. So we'll see how EUR will answer today on the background on the non-farm pros release, but this is potentially bearish sign. The same story is on our other trading setups. Mostly they stand on the weekly chart. If you remember the Australian dollar, we said that market will take it down to this low and should keep going lower. So now that's what we see here. And CD leg now shows the acceleration. So everything that stands with our trading plan with this large head and shoulders pattern, it's actually still valid. So we're watching for the market to be around 66, where potentially the bottom of the right arm should be formed. And we'll see what the performance will be. The same story we could say about the New Zealand dollar, although their situation looks a bit not as bearish as here, because here it's New Zealand dollar, this retracement is a bit higher. But in general, we have the same performance. Here we see downside acceleration. This leg definitely is faster than AB leg here. And the target will be that we are watching for is approximately 65, which corresponds to the bottom, to the left arm. So it will be somewhere between 62, 65, but for weekly, monthly chart, there's 2 points difference, not really big, not very important, so mostly this is the same area. So here we'll also keep watching for downward bearish performance. That's what we have currently briefly on the Forex market. So we could keep an eye on, but of course, major attention today to the payrolls numbers. So we'll see what will happen. And here, keep an eye on this overall performance, guys. If we will see this type of action to the downside here, this market just will collapse. Of course, we should not take any long position. We need to get some gradual, choppy downward action. So that's what we would like to see. If you have some doubts on whether to enter or not, when the market will appear to be around 1260, wait. Just drop your time frame, for instance, to the 30-minute chart, 15-minute chart. Watch for a clear bullish reversal pattern. Once you will see, I don't know, maybe it will be head and shoulders, butterfly, double bottom, some other patterns, reversal patterns, free drive, or something of that sort. You could use it for position taking. That will just minimize your risk, and that will be some more confidence to you that market tries to reverse to the upside. Nothing of these patterns to be formed. Then, if you have doubts, do not take the position. Just miss this trade. Skip this trade. So that's the common things that we usually follow in such situations.